Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to the June 5th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the entire Insights team. What we do here is break down the latest NDPSR report, and considering it is 75, partly cloudy for the next 6 days here in Northern Illinois, let's get through this as quickly as possible so you can enjoy this nice weather, starting with butter. This butter number coming in at 308.29 is a -3 to the CME 1-week average of 311.25. We traded 9 loads on the CME last week, and that 311.25 was at the time the high week for the CME weekly butter average. Typically, you would expect negative basis or lower than expected basis at the high end of the range. -3 certainly qualifies, but -3 basis isn't the only problem when it comes to butter. At that discounted level from the manufacturer was able to not even sell 2.5 million pounds, falling 1 million pounds short on sales at the high end of the recent butter range. Certainly a disappointment in both price and volume on the NDPSR. Up next is cheese, and we'll start with the blocks, 193.24. That is a 1/4 cent negative basis to the CME 1-week average of 193.60. We traded 14 loads at the CME last week at essentially a 182-ish level, so 182 minus freight. That probably went a long way to pull down the basis. And that weighted average price was affected even more because the 14 loads traded at the CME carried a lot of weight, considering sales outside of the CME were limited. So even with the 14 loads at the CME, total volume here on the NDPSR still falling short of 10 million pounds, well short of 10 million pounds, and call it 2 million pounds short of our expected 12 million pound volume. So disappointing price and volume in both butter and blocks. And not to disappoint, up next is the barrel. This NDPSR barrel price coming in at 204.19. That represents a 1.5 cent discount to the CME 2-week average of 205.15. So 1.5 cents negative, obviously well below our expected 4 to 6 cent positive basis. This is the high week at the CME, as the CME barrel weekly average has moved from the 145 neighborhood to the 206 neighborhood. Certainly a dramatic increase in price, a lot of enthusiasm at the CME. That enthusiasm not reflected here on the NDPSR because we had negative basis, and at that negative basis, the manufacturer was able to only move a little bit more than 11.5 million pounds. So the block volume falling 2 million pounds short at the high end of the range. Barrel volume falling 1.5 million to 2 million short as well, both on negative basis. Certainly a disappointment for the final week of May pricing in the cheese complex. Up next is whey. 41.60. That represents a plus 1.5 to the CME 1-week average of 39.90. Now that is the second week up off the lows for the CME weekly average in whey. We traded 11 loads at the CME last week. Of course, in whey, we're always talking about prior week's NDPSR. So this week we're focusing on the May 18th NDPSR value of 40.42. So the manufacturer was able to call a little bit over a penny premium over prior week's NDPSR. So an increase in price over prior week's NDPSR, probably the one bright spot on this week's NDPSR report, the one and only bright spot, because at that increased price level, the manufacturer only able to move 4.8 million pounds. Now granted, 4.8 is a little bit higher than the 4.5 expected volume. But if you look back here at the prior 4 weeks, certainly well short of the volume that the manufacturer has been able to clear as of late. So the story in whey is, call it higher than expected price on lower volume. And then lastly, in non-fat, 113.05, that represents a -3 to the CME 1-week average of 116.45. We traded 9 loads at the CME, and here's a change. The non-fat was able to post higher than expected volume. So the one product that was able to post higher than expected volume is tied for the largest negative basis, coming in at 3 under. The manufacturer was able to move 22.7 million pounds. So discounting in the case of non-fat actually paid dividend for the manufacturer, as they were able to move higher than expected volume. So, as I said earlier, this is week 5 of the May pricing cycle, currently getting a May Class 3 expiration of 1855. That, of course, is well below where the futures went off. So the negative basis in cheese and butter was a surprise to most affiliated with the futures trade, coming in at 1855 for Class 3, Class 4 coming in all the way up at 2050. If you carry current CME equivalents out through the entire 4-week June pricing cycle, currently getting a June Class 3 of 1950 and a June Class 4 of 21 even. We'll see what they have in store for us. We still have a little bit of pricing left at the CME. Get out there and enjoy that weather, and we'll see you next week here on the NDPSR report. Until then, on behalf of Paige, I'm Joe. Thanks so much. Bye.